Now today I want to talk to you about the different trader styles that you can adopt when you come into the markets. Now often when people come to the markets for the first time, they're a bit bewildered by all the different buzzwords and different approaches, different ways to trade the markets. They know they want to trade, but they don't know basically what style of trader they want to be. So by the end of this short little lesson today, hopefully you'll have some clarity in that and you'll be better informed to make that decision. Start off by looking at the different trader styles. Now these are the buzzwords that I'm sure you've seen out there. If not, you will see them at some point. People say, I'm a day trader, I'm a scalper. So now let's put some clarity to what exactly all this means. So we can talk about what a day trader is, what a swing trader is, what a scalping trader is, and of course we've got to end off by talking about the black box or the robot trading. So let's start off by looking at the day trader. Now the day trader is typically a trader that's in and out of the markets several times in a day. Basically he will be taking trades maybe 3 or 4 times a day, maybe less, maybe more. But crucially, he won't normally be holding the position overnight. So when he turns his screen off after the day's work, he normally won't have any open positions. Not exclusively, of course he can have trades overnight, but normally a day trader is in and out and closes the position before he switches the machine off. And they trade off the shorter time period chart. You know, when you're trading the markets, technical traders at least, we're looking at charts. And when you see a candlestick on a chart, it basically represents what price did in a particular time period. Now, normally a day trader, he'll be looking at the 15-minute chart, the 1-hour chart, and possibly the 4-hour chart for confirmation. Remember, each of these candles tells you what price did in that particular time period. So the day trader will be looking at the lower time period charts. Always good to use more than one chart, higher time period, for confirmation of the bigger picture. That goes for whatever style of trading you're doing, really. Okay, you need to spend several hours in front of the screens a day. If you do have a day job, you're not able to spend multiple hours in front of the screens, then maybe day trading is not for you. Don't think you can come and be a day trader if you've only got 10-15 minutes a day to spend in front of the charts. You'll end up getting yourself into all sorts of trouble. You'll end up with the charts on your phone as well, trading as you go. You don't want to be doing that. So if you want to be a day trader, you've got to be able to commit to maybe 3, 4, 5 hours a day. The Forex market, as you know, is open 24 hours a day. I suggest you don't trade 24 hours a day. Fatigue will kick in. That will be the first fast way to the poorhouse. So 7 hours a day, 3, 4 hours a day, maybe 6, 7 hours a day maximum, but not 24 hours a day. So those are the day traders. Again, depending on what your situation is at home, whether you're working, shift work, you've got to decide whether you're able to commit to that type of time in front of the screens. Then you've got the swing trading, often referred to as position trading. Now the position trader typically trades over the medium term view. So they're not going to be in and out on a day, they're going to take a longer term view. And they will be holding these positions overnight. Sometimes they'll be holding them over a week, maybe even a month as well, which leads me on to the time period charts that you'll be looking at there. So they normally trade off the 4-hour, maybe that's the entry, looking for the position entry, but they'll be looking at the daily chart, they'll be looking at the weekly chart as well, the bigger picture, maybe even out to the monthly. I know some swing traders actually look at the yearly charts. So the swing traders, these traders are in the markets for long periods of time, and they'll be rolling the position overnight, waiting for their profit targets to be hit, or indeed manage the trade as they go along, of course, the stops as well. So swing trading, position trading, longer time period. Only need to spend 10 to 30 minutes per day in front of the screens. This is really good for those of you that have day jobs. Maybe you've only got an hour in the evening to do the analysis. So you get onto your screens when you get home from your day job, you look at your analysis, has any trades set up? If there's something set up, you place the trade and off you go, and you look at it again 24 hours later to see if anything has happened in that 24-hour period. Now, we've got strategies. In fact, it only takes 10 minutes a day. We've got a tool that will find the trades for you, and then of course you'll just see if the rules apply, take the trade and forget about it. 10 minutes a day really for swing trades. So this really is a great way to trade if indeed you have a limited time. And I also think it's a great way to trade if you are starting off in trading as well. More about that in a moment. So swing trading, position trading, looking at the higher time period charts. Here's one I'm sure you've all heard about, scalping. A lot of people get drawn to the markets because of scalping, because scalping is exciting. You're in and out of the markets multiple times a day. Scalpers are in and out of the markets taking very small profits. They're scalping out small little profits with stops in place as well, tight stops, tight profit targets. But to make that pay, they've got to be in multiple times a day. Some scalpers are taking 50 trades a day, some are even more than that, I guess, taking small profits as they go. Very exciting, as I say. You only have to look around the sporting events around the world. You know, all the bookies or the betting shops advertising their wares, they're drawing people in to place money on the sporting events. Some gurus out there, they're drawing you into the Forex market, to other markets as well, because it's exciting and you can make all these small little profits. They are breeding basically on that human mentality. So that's basically a draw, but be very careful if you're coming into the markets for the first time looking at starting off scalping. Again, more about that in a moment. Scalpers are looking at the very short time periods. Okay, so they'll be on the 1 minute chart, the 5 minute chart, 15-minute chart. That's a little bit too fast for me this day and age. Obviously, when I was in the trading pits, we wouldn't look at the charts, but we were in and out of the markets, in a matter of seconds. I'm too old for all that nonsense now. 1 minute, 5 minute, 15-minute suits some. Doesn't really suit me at the moment, although we do have strategies for that. But really, it's a bit too fast for my liking now. Important thing about scalping is that you need to have a very high level of self-control and discipline, because it is very intense down there, very, very intense. And as we know, the biggest reason why many traders fail is because of the emotions, the revenge trading, taking on too much risk, the excitement of it all because they're chasing trades and what have you. You've got to have a very strict control of your emotions, like this chap here, if you want to be a scalper. And I often suggest that maybe you really want to give that a serious consideration if that's the first way you want to attack the markets. Maybe start on the high time periods, and after a period of time, maybe then move back down to the scalping. But starting off with scalping can be indeed pretty dangerous, I reckon. Okay, the black box and the robot trading. I'm sure you've all seen this before. I'm sure you've all been tempted into this before. This is like the black box. You buy it and out come the dollars. You don't have to do anything. Just sit there and watch all the dollars roll in. Great, isn't it? Now, a lot of you may be trading on the MT4, the MT5 platform, MetaTrader 4, MetaTrader 5. You can buy these expert advisors, they're called, or often referred to as EAs. Okay, and they're basically a set of algorithms that will basically buy and sell for you. They will tell you when you should be buying, when you should be selling, based on hopefully back-tested algorithms. So they scan and identify and place your orders in the market, perhaps when you're even sleeping. You don't even need to be at the screens, or you can be at your day job. You could be running these on your workstation, or indeed you can be running them on a VPS, and you just check every few days to see how the black box, the robot, or the expert advisor is working for you. And you can normally buy these for about $99. Seen them all over the place, people selling their expert advisors for $99. If you see an expert advisor on sale for $99, I suggest you really think hard before you actually embark on buying that. Think about this for a moment. If there were such programs out there, algorithms, black boxes, robots, EAs, call them what you will, if there were such programs out there that actually worked, there would be no national debt of Venezuela. The central banker, he wouldn't be there worrying about the budget deficits. He'd just be buying a EA, plug it into the central bank finances, and all the national debt would be solved. These do not work without human intervention. You have to know exactly what you're doing when you buy an EA. Often these EAs are working on a strategy known as the martingale. Now, I'm not going to go too much into martingale at the moment, but a martingale strategy is basically a strategy that's designed to add to losing profits in the hope that at some point the market turns back around. And more often than not, it does turn back around and you get out for a small profit. But that one time that it doesn't turn around and keeps going and going and going, you're going to blow your trading account. So if you are thinking about buying an EA for $99, make sure you know exactly what it's doing and how it works, and don't just rely on the back-tested results that marketeer has told you about. Right, let's just summarize then about the different time frames, because this does fit into exactly the different styles that you may want to adopt yourself. So the scalper, remember the scalper, he's there on the lower time frame charts. He's looking at the 1 minute, the 5 minute, the 15 and the 1 hour time period chart, the high intense trading. Bit of an overlap there with the day trader, because the day trader, he's going to be looking at the 15-minute chart as well, perhaps the 1 hour, the 4 hour, and of course the daily as well. Then you go to the other end of the spectrum. You've got the swing trader, the position trader. That trader is looking maybe at the 4 hour chart, the daily, the weekly, and perhaps the monthly chart as well. So there's a bit of an overlap in there as well. These are not set in stone. You may want to take a screenshot of this when you're deciding what style you want to attack the market with. But that's basically a good summary of the type of time periods that you should be thinking about when deciding on what style you want to adopt. So what is my style? Well, I think that really depends on three main factors. We've sort of covered it in this short lesson, but let me just summarize now. First of all, objectives. If you're maybe looking to grow a retirement account or a pension account or a savings account, the chances are you don't want to be down there scalping the markets. Maybe you want to be looking at the higher time period charts, maybe taking maybe one trade a week or maybe a couple of trades a month, something like that. Maybe you should be considering trading the markets using a swing strategy, a swing style, position style. If, on the other hand, you've got multiple hours in the day and you're sitting there wanting to carve out a second income for yourself, or indeed become a full-time professional trader, then maybe you want to be looking at trading on a daily chart. Daily chart, basically looking at those mid-range time periods, or indeed maybe having a scalping strategy in there as well. If, on the other hand, you're looking maybe to have a bit of fun out of the markets, a bit of excitement, then maybe then you should be looking at the scalping style. But I would say if you're starting off in the markets with a serious intention of making a long-term career out of it, then maybe starting off with scalping is not for you. And personality. If you're one of these impulsive decision makers, always making decisions and going back on your decisions and changing your mind and what have you, maybe you shouldn't be looking at scalping, because there's just far too many opportunities down there for you to be switching and changing your mind and getting frustrated as you go. If you are an impulsive trader, maybe you should adopt a higher time period to keep you away from trouble. Maybe you should be looking at maybe swing trading, possibly even day trading as well. So think about your personality. If you are very relaxed and laid back, then maybe swing trading is for you. So you do need to consider these three factors. So think about them when you are deciding which way you want to attack the markets. One thing I will say this, I've been trading the markets for over 30 years. I've trained lots of people. Lots of people have become successful full-time traders with my training. But one thing I've seen in common with most people is they get drawn to the market because of the excitement and the thrill factor. And that often does lead to traders failing, because as we all know, the biggest component of a successful trader is the psychology, the discipline. And if you are on the lower time period charts, that is much, much more intense. If you're trying to master the psychology, then why start at the most intense place in the market? Why not start at something that's more relaxed and then work your way down? They often say that psychology, I think, is 70%. So if you are thinking about starting a career in trading, think about the right approach. I personally recommend you start at the higher time period charts, swing, maybe day trading, and then move down to scalping as maybe a part of your trading style tool bag, if you like, that you can use once you've mastered your skills in the other areas, predominantly psychology. Hi there folks, hopefully you enjoyed that video. Hopefully you learned something there as well. Now don't forget to follow us on all our other socials. I'm always leaving tips and tricks on there as well. Don't forget to give this video a like. If indeed you liked it, give me a thumbs up. Don't forget to subscribe to the channel and hit that notification that will alert you when my next video has been released, which will be very soon. See you there.